an IPO is the last resource. You only IPO a company when you can't do anything else privately. Once you've exhausted all the channels privately, and there's nobody that wants to give you money, or you can't get liquidity at the valuation that you think you deserve, then you go to an IPO.
But Michael, you started Property Finder in 2005,
Correct.
right, in the UAE, when there was no startup ecosystem, and definitely real estate was very far away from being digital. What gave you the conviction to do it that way, and how did you know that it is the time to do it?
So I don't think I thought about it as how I want to do it. I ran into a personal challenge, a personal pain point, trying to find a great place in Dubai where I could rent. And the consumer experience was absolutely awful. You had to go through newspaper, and there was no classification, or people would tell you just drive around and look for, a billboard, and then just go and knock on the doors. And so that was the pain point that I actually went after, and said there must be a better way to organize information. They're building the Burj Khalifa, they're building the Palm Island, they're building all these mega projects, and then finding an apartment is that complicated. I grew up in Switzerland, in Geneva, and so there was already classifieds moving slowly online. And so when I got to Dubai, it really felt like something was missing. And so that's the problem I went after. Now, early on, internet penetration in 2005 in the UAE was below 40%, so you couldn't just rely on digital. We needed to actually get to market with the print. So we started brick and mortars print, but we always knew that eventually one day we would move online. We didn't really know how quickly that would happen, but we always had that vision in mind.
It's true. I've been in Dubai since 2006, and it used to be a nightmare to find an apartment. But can you tell us, where did you see that shift? How did it truly go from, okay, brick and mortar, to now people are ready to do it online, in the UAE specifically?
So just maybe by way of intro, I don't know how many people know Property Finder, but Property Finder, if you live in the UK, is the equivalent of Rightmove. So it's pretty much a very similar business model. It's a subscription business model, recurrent revenue. It's the leading platform. We operate in 6 different markets across MENA. UAE is by far our biggest market. But what really happened, and when was the switch from print to online? So a couple of events actually happened. One was an event related to us. In 2007, after we launched, we were competing against the major newspaper. And it's very hard as a startup to compete against a big newspaper that had locked all their advertisers in exclusivity agreements. So it made it even harder to break those exclusivity agreements. We were approached by a strategic from Australia called the REA Group. They're part of the News Corp empire, if you will. And they decided that they wanted to come into the UAE, and they eventually made an investment into Property Finder. There was no VC money at the time. The only people that would give us money in order to pursue our dream and our vision was a strategic that had done it in Australia. But that was, even 2007 was quite early for the move. So really we spent a good amount of 2 years of really building the platform. And when I say building the platform, I'm not talking about building the tech. I'm talking about bringing the content online, right? So bringing real estate agents from the Middle East up to speed to the digital world, and how they should connect into the back system in order to input their listings, so that we wouldn't do it for them manually, right? We needed them to use the platform. And so that took a little bit of time. There's actually no real shortcut. You actually need to bring the supply digitally online. And then the real acceleration happened in 2009, I guess. So right after the financial crisis, I think some of you might remember those articles saying people were fleeing Dubai, leaving their car at the airport. It was a pretty doomsday. And when that happened, real estate agents suddenly didn't want to be locked into agreements with the print publication that were very inflexible with their prices. And then we said, look, you can buy a subscription, 1,000 dirham, that's about $300. You can list all you want on the portal, and we'll generate leads for you. And eventually we started signing all the real estate agencies, and we had more content that was easily searchable, easily to find what you were looking for. And in the span of, I would say, 6 to 12 months, we took over Gulf News. And by the end of the year of 2009, Property Finder was leading in that vertical.
Impressive. Not only were people fleeing, and again, there was still no startup scene, and you not only didn't pull back, you doubled down, and you bought out your strategic investor.
Correct.
Tell us about that a bit, please.
So I said they came in 2007, and as a strategic, they come in and they say, well, we want to own, the whole thing. I say, well, great, buy 100%. And then they say, no, we want to buy 10%. I say, why? Because we still want you to run it. I say, well, if I'm going to run it, I want to keep more of the business, right? And then they said, well, we need majority. I said, great, you take majority, 51, and we'll keep 49. And so with them, with REA Group, what was actually quite magical with REA Group is that they were publicly listed on the ASX. And so every quarter, I could follow their financial results and think about 2008 and 2009, and I'm looking at their financial results, and Australia is not spared by the global financial crisis, and I see their revenues going up and going up profitably. And so I get really excited. I'm like, okay, this model, right, which is, because we didn't have the scale yet. We were really dabbing into it, but it clearly proved to me that the subscription model, the B2B subscription model, was something that really had a future. And so when 2009, they had a change of CEO. The new CEO came on board. What are we doing in Dubai? Like, what is this place, Dubai? Like, and so he was quite aggressive. He came over. He's like, you got to break even. I said, look, breaking even means firing 80% of the team. We'll be 3 people left. I don't think that's what you want, right? And he said, well, we don't want to be investing anything in Dubai. I said, all right, well, look, we have 2 options, right? Because we clearly don't see eye to eye. You either buy me out, or you let me buy you guys out. I said, I told you, we don't want to be in Dubai. I said, all right, so I'll make you an offer. I made an offer. First one was rejected. I made a second offer, and it was accepted, and eventually I took back the business in 2009.
Amazing,
Yeah.
amazing. And then
obviously it was a much better deal than it was 2 years ago, but obviously the conditions were quite different as well.
Of course. But and I mean, MENA is famously fragmented, right? You said your biggest market is the UAE, but you're also expanded across other markets, like Turkey, for example, right? But culturally, legally, from every single aspect, when you think about it, that market is fragmented, right? How do you know when a market is ready, and how do you navigate this fragmentation? Using economies of scale, if that makes sense.
Yeah, so the MENA market seems like one region, but I guess it's like Europe, right? It's one region to the Americans, but once you arrive here, you realize that there's a lot of different countries and cultures and languages. It's the same thing. I mean, not one Arabic language is the same. I think we didn't think too much, and that's the great thing about being a young entrepreneur. I was 24 when I started the business, is that you do a lot of things because you're passionate about and you don't overthink it. And so what we realized is that, okay, this is an amazing business model. If you can establish the leading real estate digital brand in one market, you clearly have grounds. And so we looked around, and we looked in Qatar, in Bahrain, in Egypt, in Saudi, in Turkey, and there was not one brand doing what we were doing. So we said, all right, let's go and let's try. And we tried the first market in Qatar, which was nice and small. And very quickly, because Qatar is well organized, meaning that the real estate agents are licensed, we did really well. A classified business needs a relatively structured market. But that gave us wings, and we said, okay, let's open in 5, 6, 7 different markets, right? And so when we eventually got involved in Egypt, right, things got a little bit more challenging.
I bet they did.
But eventually it paid out. I mean, Egypt, we opened in 2011, and until 2018, we were sub $1 million in revenue. And then New Cairo City was built, which is a city that can host about 6 million people, just outside of the main Cairo city. And once all these new properties came online, that business started flying, and it's now our second biggest market.
Amazing, amazing. I want to shift gears a bit from Property Finder specifically to you as a founder, right?
Sure.
What do you think, what does it take to build and sustain a category-defining business in real estate, which is traditionally a very tough and very traditional industry, and in a market that is not ready yet?
I think it takes passion, right? I think without the passion, it's really hard. I mean, that was 20 years ago that I started, and I'm still running. I'm still the CEO and the chairman of the company. So And the passion comes from a problem that seems simple to solve, but that nobody else seems to care about, right? And once you run into one of those problems and you're like, I can see that I can actually do a better job than what exists, then that usually ignites a certain passion. Now, the passion gets you going for some time. After that, you need a little bit more than a passion, right? And we start talking about things like shared purpose, right? So today at Property Finder, our shared purpose, quite high level, but is to change living for good in the region. Now, that might sound a little bit fluffy, but let me break it down a little bit for you, right? So we cater really to three communities. One is the people that are searching for a new home, right? Either to rent or to buy. And they're likely to make the largest financial investment if they buy. And even if they rent, it's a pretty big commitment.
Oh, yes.
Largest financial investment in their life. We get really excited by providing the right data and the right information at that moment, which is not something that was available 10 years, 20 years ago. That's one community. Second community is the real estate agents. We have over 7,000 companies listing on our platform, and some of those companies, when they signed up with Property Finder, had 1 or 2 agents. Today are running agencies with 500 and 600 agents, right? They're big agencies. And I can see the impact that it has on so many lives and how many dependents and how many families are thriving on the platform. So that gives another, another big passionate impact, if you will. And then the third community that we serve is obviously our people, our employees. And we believe that we can have an impact on those three communities and hopefully make a little dent in the way people live and improve living in the region of the Middle East.
Thank you. You're truly what embodies an endeavor entrepreneur, so I'm so glad to be interviewing you here.
Thank you.
I was previously talking about liquidity, right? And we said IPOs, M&A, secondaries. But you went one step further. And last year you led a management buyout, which actually positioned Property Finder at $1 billion valuation. So he's one of our newest unicorns in the region. Can you take us through it a bit more? How did it happen? We didn't exit as catalysts. We believe there's much more potential there. But how did it shift also the long-term bets that you're willing to make?
Sure. So after I bought back the business in 2009, we stayed on our own for about 3 years in order to get to profitability and in order to show that we had the ability to scale into another market. Once we opened Qatar and that we were able to show revenues with the right unit economics in a new market, we said, okay, let's go and find a partner that is going to help us fuel the growth in different markets. So we went to a local VC called Beko Capital, which some of you might know. And so they invested in 2012. They led a $2 million round at a 15 million valuation. In 2015, so 3 years later, as we were experiencing the depth of the Egyptian market and realized that to build a consumer brand in Egypt, you need a little bit more than $2 million, we went and we raised $20 million from Vostok New Ventures. Mm-hmm. And then in end of 2018, we did a larger round of $120 million from General Atlantic. Mm-hmm. And post-COVID, so COVID was transformational for the UAE. I think some of you who have been before and after COVID, they can really see at least Dubai, but the whole region is really on a rise. And obviously, we benefited massively from it, right? Our business from 2020 to today did 6x in top line, right? So, and in 2021, when the market crashed, when the rates went up, the market crashed. Vostok New Venture was a publicly listed company. Mm-hmm. They needed cash. They came to us, myself and General Atlantic, and they said, hey, we would like to exit. And so here we bought out Vostok in 2021. And that was about a $40 million transaction, and that was done by the shareholders. Mm-hmm. But in 2023, our first investor from Beko said, look, I've been invested now for 11 years. I would like to exit. And it was challenging for me because obviously I wanted to provide the liquidity to an early investor that had trusted into the business, mm-hmm. but we were growing for 50% year on year. And running a process when you're growing at 50% is very distracting, right? And then we started becoming quite profitable. So I went to GA and I said, well, how about we raise some debt and we buy out Danny? And he said, well, how are you guys going to figure out a price, right? I mean, you guys have been partnered for 11 years. How are you going to figure out a price? And I said, look, I mean, the guy came in when it was 15 million, so he had a good run. As long as we find a fair price, it'll be fine. I think we shook hands at a 850 million valuation, and then raising debt took a little bit of time because
Danny
it was
very happy with
it was
the
it was the first time that kind of debt was raised. So we raised 90 million exactly to be precise from Francisco Partners in 2023, and eventually we bought out Danny. And because it took a little bit of time and the business was doing so well, we eventually agreed on $1 billion, and we bought him out at $1 billion. And I think it was a great exit for him, and it was a great buy for the company, who's today worth double that.
How do you see the next potential exits? How do you see it playing out for you as Michael and as property finder? Is it an IPO where you keep it? Is it more a private equity play? Is it another management buyout where you keep the whole thing? Like,
look, I think when you run and you operate a business that is doing great things around for the community, is successful, is profitable, is actually entering a territory where it could actually be distributing dividends, you don't think about an exit the same way as if you're burning cash and you're out of breath and you actually, the exit is the only thing that is going to free you. That said, I need to continue to provide liquidity to my shareholders. General Atlantic has been invested for 7 years. They're very happy, but at some point they're a financial investor. They're going to need some liquidity. So, look, different avenues. I think for a profitable, growing, leading marketplace in that vertical, there's either the local sovereigns, right, that are excited to come in. There's plenty of growth funds that are actually showing interest in coming to the region. There's the crossovers or the pre-IPO kind of funds that could be in the Americans, right? The pre-IPO or hedge or crossover, like we call them. And then finally, the IPO.
How far-fetched is an IPO or not?
Look, an IPO is a headache.
Absolutely, absolutely.
Right?
I agree with you.
Would you agree? It's a headache, right?
But I'm sure everyone's thinking about it.
I mean, who wants to rush into public markets when, it's every year there's a tsunami on these public markets, right? I mean, who needs that in their life, right? I mean, I'm also thinking, do I want to be operating a company where I wake up every morning and I'm stressed and the prices are up, the prices are down, and you have to... So I think I'm not rushing, right? Because I think what the world has demonstrated, or at least the financial market has taught us over the last couple of years, is that you need significant scale if you're going to IPO, right? Gone are the companies like sub $5 billion going to a public market is going to the slaughterhouse, right? You're going to end up being a lame duck with no liquidity, and you're going to have all the duties of the regulators and without the benefits of it, right? So I think scale really matters if you want to go public, and then looking at the post-IPO liquidity is also something that really matters. I mean, very few markets apart in the U.S. have post-liquidity. Have liquidity.
Don't kill my previous slides, I beg you.
I don't kill it because I think that the UAE is coming there. If you look at the liquidity where it was 3 years ago and where it is today, it is more liquid, but it's still not something where you want to dive straight in, right? I mean, to get liquidity in the UAE, you would need to get into the MSCI index, right, for the Middle East. And the threshold right now to get into MSCI index is $2.2 billion of free float.
Yeah, okay.
Right? So you need to have $2.2 minimum billion trading on the stock market, and therefore, like I said before, it needs to be 5+. So we're not in a rush. I mean, those kind of valuation are really in sight, right? I think it's a couple of years, whether it's 2 years or 3 years, I don't know. We'll see. It depends a little bit on how crazy the UAE market continues to grow. It seems to not have any limitation, but it's there. And I was fortunate enough to meet James Gordman, the former CEO of Morgan Stanley, just before he retired. And so I asked him, I said, sir, I mean, you're a banker, you obviously took a lot of company public. What's your recommendation about an IPO to a founder, right? A, if your competitor is going IPO, should you rush and be there before them? And then what are some of the consideration I should have as a founder before an IPO? He said, first of all, never rush to an IPO. Let your competitor go. Yes, some investors will tell you they'll control the narrative. Look at Lyft and Uber. Uber came after Lyft, and it doesn't mean that, at the end of the day, investors will see which one is the better business,
Absolutely.
right? So the truth always prevails. And second, he said, an IPO is the last resource. You only IPO a company when you can't do anything else privately. Once you've exhausted all the channels privately, and there's nobody that wants to give you money, or you can't get liquidity at the valuation that you think you deserve, then you go to an IPO. So I've got a few more private options before we go there.
One subject I cannot not touch about is AI.
Yes.
How are you using it at Property Finder, and where do you see it going in the next 5 years?
Look, that's a big topic, and I know there were people before me
That's
way
why
more knowledgeable about the topic, but maybe I can tell you how I see it as a founder and how do we think about AI, and maybe some of the founders in the room can reflect on it. But first of all is, when you lead a business, you need to ensure that you're utilizing the power of AI as soon as possible to manage your cost, because that is the first area where AI has an impact. And there are mainly, three areas. Is it obviously in generating code, right? So we don't hire any more engineers that don't want to work with AI, right? We say, hey, why should we hire you if you're not willing to use AI tools, because your colleague who loves using AI tools and doesn't feel threatened by it has a 10x production of what you have. So you either embrace it or you become irrelevant, right? Customer experience, customer care, customer service, whatever we want to call it, obviously high touch. AI is a clear case, and we're clearly in the middle of that transformation. And in sales, I think you can obviously narrow your sales funnel with AI. So using it in those functions is key. Why? Because it will free up EBITDA, it will free up cash, which you can then invest into other areas of innovation. So I think that's the first area of AI, is reducing your costs so that you can be more aggressive on your product development and on your growth. Figuring what is the AI tool, really, or what is the AI technology that is going to transform the way people search for real estate. Yes, classified has been there forever, right? I mean, it's like a 50-year-old product, right? It was print, and then it became online, and it seems like it's going to be ripe for disruption by AI. How? We still don't know, right? So I always say to my teams, I say, the only way we can prepare ourselves is to be ready. And how are you ready? Is that you ensure that your operations are internally as simple as possible, so that whenever there is a threat, whenever there is a startup that seems to have come up with that innovation, because it's more likely to come out of a startup, let's be honest,
Absolutely.
right? I mean, I'm not arrogant to say that we're going to be cracking the next AI revolution, but we can spot it early on and partner with those and bring them on board, or learn from them and do it faster than them once once they've proven the product. So I always say, simplify your operation internally. If you're spending 50% of your time in talking about what's happening inside the building, right, which is your employees, your OKRs, your meeting, versus what's outside the building, which is your customers and your users, right, then you're ill-equipped whenever AI will happen. You need to be 80% focused about what's happening outside the building, and not focus so much about what's inside the building. And that's a big challenge in scale-up companies, because you bring in all these top talents that come from large corporates, from the Amazons and Facebook and Google of the world, and they come and they want to replicate what they've seen in those corporates. And that slows you down, right? So staying nimble is probably the best way to be prepared for AI. I don't know how we're going to get hit by it.
Okay. You have a magic potion and you're 24 all over again, but you have the maturity and the knowledge today. What would you build now?
If I had the funds that I have now, or without the funds that I had back then?
Look, you have the maturity, and
If I have the funds that I have now, I think, to be honest, I think that I'll move into a more philanthropic project, right? I mean, I don't want to sound cheesy, but I always say, entrepreneurs, we have this ability to fix, problems, pain points, like I said in the beginning. As proud as I am of what we're building at Property Finder, I want to believe there are bigger pain points out there to be fixed than finding a home, right? Finding a home is great, but I think we can have a bigger impact, right? I think there's major problems in the globe, right? And I have 2 young kids, and so I think about them and their future. And I think that there are challenges and issues that we can solve. One of it that is close to my heart and might sound a little bit controversial here is understanding what drives people to extremism, right? And it's a big challenge in our part of the world, right? In the MENA region, where and how does extremism rise? And what can we do to catch it at the beginning to avoid getting it out of control the way it has? And so I think that's one of the... but I'm not giving up. I think I still can do it. I still can get there one day, hopefully.
Amazing. In the last few minutes we have, I'm going to ask you like quick questions where just, short answers. A surprisingly useful founder habit you've picked up over the years? Take notes.
Yeah, always part ways with whether you're partners or employees or team members in the best possible way, right? I mean, never let somebody leave your company with a grudge, right? Mm-hmm. And make sure that you're always on good terms. It's a small world out there. One employee or one partner that had a bad experience with you will have the impact of 100 promoters, right? So make sure that you always treat everybody fairly.
You never know where life takes you.
Yeah.
A non-obvious way to reset when things get overwhelming, and I'm going to use that.
Look, you'll find. Look, I mean, if I'm in Dubai and it's like a very overwhelming day, I'll go and I'll either hit the gym, go swim, run, do sports. I think the sports endorphin and hormones have an ability to make you reset, and I think sports have. I wouldn't be the entrepreneur that I am today if I wasn't, big into sports. I think they go hand in hand. But if it's a little bit more than that, and a couple of times I was like, I can feel, the burnout potentially coming, right? I mean, you feel that, every small problem seems to be too hard to address, and you can feel it. What I typically do is I get on a plane and I go somewhere and I just get away from the craziness, right?
Okay.
So and it sounds counterintuitive, right? Right? You go away, you go far away for a couple of days. You just cool down and then I was saying to my wife earlier, it's funny as I sit in the plane, literally an hour or two in the plane. I don't know if it's the altitude. I don't know if you guys have this, but like answers just come, right? I mean, it's like as soon as you get out. Yeah. So just take yourself physically out of the madness.
Something you believed about entrepreneurship at the beginning that turned out to be completely wrong.
Yeah, it's not glamorous, right? Oh. Any entrepreneur that gets into entrepreneurship because either they think that it's a faster way to success or it's a more glamorous way to success, they're wrong, right? It's not glamorous and it's very long and tedious. Mm-hmm. So that part I got wrong. The part that I think was more rewarding is that it ends up being bigger, right, than expected. I didn't think that Property Finder will become a multi-billion-dollar business, employing 650 people operating in different markets. So that part is way more rewarding. But I thought, when I started the business, I thought I'd start it and I would sell it 2-3 years after and retire on a beach somewhere. That's what I thought.
And here we are, 20 years forward, and you're still building it.
Yes.
And last one, a motto you live by.
A motto I live by is do everything with a high integrity, even if it means that sometimes it's more expensive or it means taking a detour. It usually is a good investment on the long term. So particularly in the investment community, people have a very sharp nose and eyes for integrity among founders. We've seen a lot, right?
Yes.
And I realized that there's plenty of founders and plenty of high-performing businesses out there. What investors struggle to find is who are the ones with the highest integrity.
Amazing. Thank you so much for your time today. Thank you, everyone.
Thank you, guys.
Thank you, Michael.